Yes, good morning. Morning all. Welcome to this webinar. Like we indicated in our call out, we felt it was necessary for us to have a discussion get a discussion around the National Social Security Fund's deferral of payments, because we believe it's something key that we need to talk about, especially in this period as companies are trying to recover from COVID-19. So very good morning to you all. My name is Daniel Birungi. I'm the Executive Director at the Uganda Manufacturers Association. This morning, I'm pleased to have with us two members of the National Social Security Fund management team, senior management team that is Biamugesha, who is Mishad Biarugaba, my apologies, who is the Managing Director of the National Security Fund. And we have Geoffrey Sajabi, Mr. Geoffrey Sajabi, who is the Head of Business at the National Social Security Fund. We're mindful that today is the 1st of May, so happy Labor Day to all of you wherever you are. And we hope you're keeping safe and staying safe and keeping that social distance to ensure that we keep COVID out of Uganda. You're most welcome, panelists. Can you hear me? Richard, can you hear me?
Yes, we can.
Okay. Just
yes,
to frame,
I can hear you as well.
Excellent. Just to frame the discussion, we are in a very interesting and very disruptive period. COVID-19 has thrown out a lot of what we call regular business practices within our businesses. I know, for example, that we could be having this discussion in maybe one of our boardrooms, but today we are holding it via Zoom, which is something that we're all having to learn. So, but one of the things we've gotten feedback on from our members is that this period has also resulted in significant impact on cash flows of businesses. As a result of that, a lot of businesses are now contemplating how do they move through this period of depressed sales while also maintaining their staff. And of course, any little bit helps. I can tell you as well that for the manufacturing sector, between 50 to 70% of the addressable market has automatically been removed as a result of COVID-19, because the people we would ordinarily sell to are at home. Some of our factories are either operating at reduced capacity or not operating at all, which then brings us into a situation where there's need for interventions that enable us to proceed. So perhaps my first question would be to you, Richard. From where you sit, what are you seeing as the impact, and how well positioned is NSSF as a business to navigate the current business environment?
Thank you so much, Mr. Birungi. Obviously, like everybody else, we are seeing an impact directly onto our business, because obviously members or the employers are not remitting as much as they would have ordinarily. But let's start from the beginning. I think the fact of the matter is that the NSSF business was resilient enough to be able to provide a delivery that was commensurate with the times. In other words, as soon as the measures were announced by government, we were one of the first institutions to be able to still offer 100% of our services online, allowing our staff to offer the services from their homes. And we had sufficient tools to enable our customers to continue to enjoy the services that they would ordinarily have had. So in a sense, you can say that the business has been resilient in building that extra capacity to allow not only our staff, but also our customers to be able to continue to enjoy the services. So we continue to allow our new members to register register. We continue to allow our employers to register. We continue to allow our members to check on their balances, make changes to their beneficiaries, their details, all the stuff that they would normally do. But we've also allowed our members who are qualifying to actually continue to apply for their money, even within this very difficult period. And we've seen people apply for their money for various things, obviously qualifying. But the big situation has been around allowing members to withdraw some of their money to help them during this pandemic. I'll touch that a little bit later. So on the business side, we continue to be resilient. I was looking at the numbers the other day. Our electronic channels have tripled in terms of volumes that are going through there. Obviously, people don't have access to our branches, but they can now have access to our call centers. They can have access to the USSD. They can deal with the app to do all the things that they would ever wanted to do. So coming to the employers themselves, we've noticed that certainly during the month of April, which we just finished yesterday, our collections have been short by about 20%. So our target is about 100, and we did about 80. So 20% of our target hasn't been achieved. But as we suspected, there were some sectors that have been hit quite hard. Manufacturing is one of them, although some manufacturing will thrive. Certainly, some of the companies that are producing some of the stuff that's required during this period might thrive. But we've seen the tourist industry, we've seen the hotels, we've seen the people who are in entertainment, we've seen those who've been in trading, people who are bringing stuff from China specifically. Their supply chains were disrupted quite earlier on, and we've seen those individuals who can't sell now obviously suffering. So on a whole, we've seen an impact on our volumes. We did go out to the market, I believe on the 31st of March, and offered employers who were going to be affected or who felt that they were going to be affected, that they could apply for an amnesty for a 3-month period, starting with April, May, and June. We would then allow them to basically only make contributions if they were making those payments to their staff and salaries, the 5% contribution. However, the 10% employer contribution, we asked them to come and arrange with us to ensure that that amount was withheld, save them the cash flow, help them to pay off some other urgent things during this period, but then come to us for a plan, so that once the situation unlocks, hopefully they can begin to make some sales and hopefully raise some cash from their customers so that they can then begin to pay us. And we allowed our employers to basically come up with plans which they could stretch as long as it was comfortable for the businesses. We felt that was the best situation in the circumstances. Of course, we've continued to have pressure on our members who ostensibly would love to have a proportion of their benefits paid to them. I think the number has been around 20%. Some people have even gone to the extent of 50%, but some people have dropped it up to the extent of 5%. But maybe we can talk about that specifically. But certainly, as a business, we've been resilient in offering services, and we've also given our customers the ability to basically manage their cash flows during this very unfortunate situation.
Okay, thank you, Richard. Now, just to that very point about the deferral of payments, could either you or Geoffrey unpackage it for us so that the member who may not have heard of it before is able to contextualize what exactly does it involve, what are the processes, how do you access it?
Okay, I will let Geoffrey talk about the details of that. I'm sure he's already dealt with 900 employers who have already applied. So definitely we do have a
actually, yeah. Thank
Yes,
you, Daniel, and thank you for hosting us. So far, about 1,400 companies have actually applied. This is more than 15 billion in terms of the monthly total that they pay into the fund. The procedure is that an employer goes to the employer portal. There's an e-portal that ordinarily employers use when they are paying NSSF monthly. So they go into the portal. There is an option for applying to defer the contributions for the month of April, May, and June. There is a very simple form that takes you less than 2 minutes to fill out. You literally fill out the name of the employer, you select the sector that you're in, and upon submission, we're then able to respond. Yeah, so it's largely on the portal. In terms of the other bit of the detail that Richard has partly hinted on, the deferral is very specific to the 10% contribution by the employer. Now, the rationale is that the 5% is ordinarily money that the company has deducted from the member. And so legally, it's not tenable that you deduct the 5% and you keep it. So the expectation is that when you pay salary and you deduct the 5%, you pay the 5%. What the company is allowed to defer is the 10% that is coming from the company. The other bit of the detail that you might want to understand is that we've given companies up to end of September, okay? Ordinarily, your contribution for April should be coming by the 15th of May, but we've said your April payment can come by the 15th of June instead of May. So you've got some bit of window. Your contribution for May should ordinarily be coming by the 15th of June. We're saying that can come by the 15th of July. And of course, your contribution for June ought to be coming in by the 15th of July. Again, we're saying you can extend that to the 15th of August. But in any case, even if an employer is unable to pay within that particular arrangement, they can still have up to end of September. Of course, we're mindful of the fact that if you accumulate all the payments up to end of September, chances are that then it becomes even harder to pay because you've accumulated quite a lot, but also you've got no more payments that are expected of you. So that's why we're saying you can choose to work within the time that we've been able to provide you, or you can actually pay at the end of September. The other detail that is key for companies to know is that besides the month of April, May, and June, there are also old outstanding payment obligations. We've got a number of companies, including in the manufacturing sector, that signed earlier payment plans. And some of these plans have got payments falling within this particular period. And we know that they may also not be able to actually pay those as per payment plans. You notice that that hasn't been made part of the amnesty, okay? We think that for that particular aspect, the company can reach out to their respective RM, to the branch manager, to the regional manager, and they can be able to agree how best to schedule payments that had earlier been agreed in a signed off payment plan. Those are the payments that were agreed at the branch level. We've got a few exceptional cases that had gone as far as legal, that had gone as far as court, okay? And through the process of court, NSSF had agreed payment plans, okay, with a number of manufacturers. Now, for these particular ones, because there's an element of court, the logical thing that we've found is to ask these companies to still get in touch with our legal department through the branches, okay? And again, they can be able to discuss and make new arrangements upon those particular payments. So basically that's how the thing works. Those are the details.
Okay, Geoffrey, just to tag onto that and to delve a bit deeper into that, if I'm hearing you correctly, you are saying that companies that ask for deferral within this period will have up to the end of September to ensure that they are up to date on the deferred payments as well as their current obligations later once they start. Am I correct?
Yes.
Now,
yes.
I think a bit of the feedback, because yes, you have sent out this communication and this response to a number of companies, and the bit of feedback coming out is that if we are to project, we won't know what will happen tomorrow, certainly, but we can comfortably say that the next 2 months are going to be a bit unstable, a bit unclear in terms of companies figuring out how the market is going to be, how their businesses are going to operate. So essentially, we are saying, subject to opening up on the 5th, if that happens, companies will probably stabilize around 1st July, thereabouts. Now, if a company that is just beginning to restart production is then expected to pay the amount that is due over this period, in addition to its current obligations, and ensure that this is done by September, isn't that a bit difficult for companies, especially given these depressed cash flows that are present at the moment? Is there a possibility that if I have a situation such as that, I can come to NSSF and extend that payment plan beyond September, or is that set in stone?
Thank you, Daniel. Certainly that is not set in stone. By the mere fact that we were, I think, the very first company to come out and give employers this option means that we actually care about what our members and the companies are going through. We also need to appreciate that the circumstances differ from company to company, even within the same sector. So there are companies that after about a month or two should be fine. There are some that could take even a year. There are some that may take even 2 years. I think the comfort you need to have is that we've got in place a mechanism where, in addition to the amnesty that we've given, companies will still be able to get in touch with our respective branches, to get in touch with the RMs, to get in touch with the regional managers and the branch managers, and they can always make new plans, especially in regard to the normal payments at that point. So let's imagine we've given you a plan that says you ought to have paid the monies that relate to April, May, and June by the end of September. And for whatever reason you are unable, we expect that you will use the mechanism in place. You'll contact your RM, you'll contact your area manager, okay? And you can always sit on the table and agree based on the circumstances of the company. So that is something that we couldn't roll out as a blanket, thing, but we totally understand that some companies may not come off the same way. So should you fall in a category in which, despite giving you this extension, you still get to a point where your cash flows have got issues and these are justified, you can still always reach the fund. But also, Daniel, for your information and for information of the manufacturers on this platform, is that even before COVID, we still had arrangements in place where companies, for certain reasons, would not be able to pay. Again, they would reach out to the fund. So the whole thing is about communication, okay? So even before COVID, companies would ordinarily reach out to us and say, for reasons ABCDY, I'm unable to pay as per required timelines. Can I have an extension of a month or 2 months? And we would accordingly agree. But would also be able to explain the implications, and I want to hint on that. Now, there are implications of paying beyond the agreed time. Like I told you earlier that if you pay April by the end of June, you do not pay penalty on it, but most important, you don't pay interest on it because it's come within the same financial year, okay? If you notice what we put in the letters, the only payment that would attract interest would be the money meant for May. because May would be coming in July, which would be a new financial year. Now, when the fund receives that money and we undertake investments, we're supposed to give members interest on their balance at the end of June. And that is the interest that we give by the end of June of the coming year. So the implication is that, yes, we can agree a longer payment plan, but companies need to understand there will be an implication in terms of interest, okay? So the longer you take to pay money that ought to have been paid within the current financial year, and it crosses into a new financial year, then you'd be expected to pay interest on it. The only money that would not attract interest if you paid the following financial year would be money for June, because again, ordinarily June is expected to be paid by the 15th of July. So meaning that even if I paid the June money in July, in August, in October, December, it would not attract interest. But the contributions for April and for May, if they come later than the end of June, the additional expense on the side of the company would be the element of interest. But the fund would not penalize you. So you'd not be paying a penalty, but you'd be paying interest. So that is the implication.
Okay, and still on that, I need to dwell on this because I think it's the main focus of our members' discussion on the amount, on the insistence on the 5%. Again, is this mindful of the current situation that, for example, Daniel Manufacturing is at the moment shut down, is unable to produce, and therefore is not bringing in money, but is still expected to remit the 5%. Daniel Manufacturing maybe has not paid its employees this month because we've deferred the payment until a later period, but we're still expected to pay the 5%. Or do those circumstances differ as well?
Thank you, Dan. Now, we expect that 5% to be paid upon payment of salary. So let's imagine Daniel Manufacturing has been unable to pay the salary for the month of April because of the challenges that you've actually been able to state. So if the April salary is paid in May or is paid in June, that is when we expect you to have deducted the 5%. So we do not expect that simply because the month has ended, then you pay the 5%. The assumption is that at the point when you are paying your employee the salary for the respective month, you've withheld the 5%. Ordinarily, if there was no NSSF and that 5% was part of the salary going to your employee, you'd have paid them all the salary, okay? That's why we are saying that if you paid salary and you've withheld the 5%, you ought to pass on the 5%. I think the other thing that we need to appreciate even as manufacturers is that the fund has got a balancing act here. So yes, we're trying to help the companies, but also we've got members, okay? We've got members who expect that as long as they've been paid their salary, their 5% ought to be paid, and that's a matter of law. But also we know that because times are difficult, there is a very high chance that quite a number of employees will be laid off. Now it gets very tricky if someone is laid off and the company did not even remit their 5% on the salary that they received when they were still working. So we want to limit exposure to the risk, both to the manufacturers, but also to the fund, that you lay off someone, but their 5% contribution, which ordinarily came from their salary, hasn't been paid. Okay, but we've also been interfacing with companies that even wrote back telling us that we have suspended the payment of salary up to June, okay? Again, we told them, so we then expect that you'll only be able to deduct that 5% at the point when you paid salary. So we don't expect you to pay the 5% before your employees receive the salary meant for that month. But I think we need to appreciate that there are two parties here. So you've got the company, but you've also got the member, okay? So even as much as we're trying to support companies such that our members can be kept in employment, we know that some could actually go out of employment. And at the very least, we need to at least have their 5% paid on time. It's easier to explain to them that your 10% is yet to be paid, but it's much harder to explain to an employee who lost a job today why their 5%, despite having been paid the salary, was not paid.
Okay, and on the interest issue, because yes, we do admit to, and it's certainly true that the 5% is the employer, the employee's money. But don't you think you're now perpetuating a situation where I, as an employer, looking at my cash flows, I'm going to choose not to pay my employees until later, because otherwise I'm exposed to if the 5% is the difference between my ability to stay afloat and paying my employees, it then becomes difficult for me to pay my employees with the knowledge that once I pay them, I'm on the hook for the 5%. Is there a workaround? Is there a discussion that can be had? For example, if I and my employees are in agreement, can we come to you with that agreement to say, look, we understand the situation in our company, and so we are agreeing for a deferral of this 5% until a later point?
We can always have a discussion, of course. You know, the doors of the fund are very open. We understand that the circumstances differ from company to company. So discussion is always healthy. So should there be anything else that you think we can do, please get to us and we can again sit around the table and we discuss a solution. But I think Richard might also want to add to that particular point.
Yeah, certainly.
Yeah.
Richard, yes?
Yeah, let me actually do that. First of all, it's about the 5%. You know, the fact of the matter is that the 5% is actually part of the employee's salary. And once the company or the employer does pay a salary, they will withhold that 5%. You know, ordinarily they would have given it to the employee. So it would have been part of the salary. So the reasoning is that if you've been able to pay a salary to your employee, then you should be in a position to withhold the 5% and pass that over to us and not retain it within the business. So that's the point number one. The second point is that the amnesty is geared towards the amount that the company contributes towards the employee, I'm mixing my employee. Right. So that fact is that you are contributing this on behalf of the employee, and therefore you might want to retain that within your business to help you with your cash flow, paying things that ordinarily would help the company to stay afloat, you know, like whatever else that you need to pay in order to sustain the company for working flow purposes. The third point is around the timing of the end of June. It's important to note that the law requires that NSSF pays an interest of at least 2.5 percentage points to a member's balance held as at the 1st of July or the 30th of June. So that's why once we exceed that target of the 30th of June, then interest has to kick in. That's why we insist that the employer will make that decision, but they need to know that there is a requirement by law that we must pay the employee's account an interest which must be at least 2.5 percentage points. Of course, we normally pay that interest based on the performance of the fund. And I believe that there was actually a question on the chat around our resilience on our performance as a fund, and I hope that you can allow me to answer that at some stage.
Yeah, I certainly will. We certainly will be taking questions as we go along. For those of you who are just joining us, we are on a webinar with our colleagues from the National Social Security Fund. We have the Managing Director, Mr. Richard Byarugaba, and we also have the Head of Business, Mr. Geoffrey Sajabi, and we are unpacking the deferral of payments that they've put up to assist companies that are distressed through this COVID-19 period to manage their cash flows effectively. We shall be taking questions later on in about 10 to 15 minutes. In the interim, for those of you who are on Zoom, you can certainly type out your questions on the chat. We've also received quite a number of questions prior to the event, which we'll be going through. I believe some of them have already been answered because some were about explaining the actual impact of COVID-19 on NSSF, and I think the managing director has done a good job of that. Others were around detailing what it takes to utilize the deferral mechanism, and I think we've also covered that. I would also then like to move to post-COVID as a recovery period, because as you mentioned, Richard, there's been a couple of questions about member access, early access to their funds. And for us, our approach to this is from the perspective of we have a distressed situation. The incomes in people's pockets have reduced. A lot of people are not able to generate income. And I wanted to know, from where you sit, what are you seeing as the levers that you have as NSSF to participate in stimulating the economy once we get out of this lockdown period? And here you can expand the discussion into the early access discussions that have also been had on the same issue.
Yeah. Okay, so we've actually done quite a little bit of work initially on this particular subject because, since the discussion of the liberalization of the pension sector, that discussion began early 2011, 2010. There's been all sorts of permutations and combinations with regard to what the fund can do. But what's also been very clear to us is that our members, unfortunately, don't save a sufficient amount of money, even when they are forced to save under the NSSF. And the fact is that many of our members get an average today of slightly less than 15 million shillings when they retire. They've saved for 30 years, and that money is then obviously available to them for only about 2 years. So this is all backed up by research. So the truth of the matter is that our members are not saving enough, and even then they are not saving if they are not forced to save. So typically people who have not worked for NSSF, who have not saved for with NSSF because the law requires them to save, you'll find that they will have saved absolutely very little by the time they actually get to their retirement. So given those facts, we've been looking at what else we can provide. We've basically divided this into 3 areas. So the first is the short term. What do our members require on the short term? Typically, our members will require a savings scheme to assist them with their medical. So they would like to be able to access medical services for their family and those they care about. They would like to be able to pay school fees for their kids. And that means that they need to have a product that actually helps them for that. The other area that we also find they require assistance is normally when they lose their jobs. So people lose their jobs sometimes for short periods, sometimes for long periods, and sometimes they completely lose their jobs and go into private work. So that's typically what befalls our members during the short term. In the medium term, we've also found that our members would actually like to be able to have a house that they've got. They would like to be able to stop paying rent and own it in the long term. And they would also like to be able to take their kids to university or pay for school fees during university. And then obviously the medical situation does remain, especially when they get serious medical problems. And then finally, we find that they still want some money once they retire. And that money might either come in as a lump sum, or they might want it to be paid as an annuity over a certain period. So given that, it's quite obvious that the current strategy where NSSF takes 5% and the employer gives you 10% is not sufficient for the member, for them to be able to have money pay through all those situations that I've mentioned. So we've provided guidance to the parliament or to government to come up with an amendment to the law which will enable us to basically provide a midterm access. And I know that that has been talked about quite a lot, but the specifics of that perhaps are not very clear to the public. So what we are then suggesting is that rather than save 15% that will contribute towards your retirement benefit, we would like that you save, in addition to that 15%, another 15%. And you can determine how that will come in. It might be another 5% from you and 10% from your employer if the employer is agreeable. But we also know that quite a number of companies do provide what they call occupational schemes or in-house schemes, which means that they are already paying perhaps another 15% into that in-house scheme. So if you do combine what you've been paying into your in-house scheme and what you've been paying into NSSF, then it is very likely that the fund will be able to give you four additional products. The first product would be what you can call a medical benefit, and that would work specifically or as easily as paying into an insurance company and the insurance giving you insurance for you and your family to be able to go to a medical facility and get treatment. The second product that the fund would be able to provide is an education benefit, which basically means that you might be able to save some money and utilize part of that money to pay either school fees now or to pay school fees in the future when your kids go to university. The third product would be the unemployment benefit. That would be the best form of relief that would have been able to give to our members today if COVID had come once we'd introduced that product. Because ostensibly what this requires is, for example, to be able to give our members 3 months' salary based on what they're currently earning because of the unemployment benefit that would then be available for them. But I think the most important benefit of the four that I talked about would be the housing benefit. And the way that would work is having saved with the fund for about 10 years or having attained the age of 45, then a member would be allowed to draw from that particular benefit money as a lump sum, 20% in a cash to send it to a developer to get a house, or even to send it to a bank so that the bank can give you a mortgage as a top-up, or allow 50% of your benefit that is held with us assigned to a bank so that the bank again can give you that as form as a housing benefit. Now, that we believe would be a very good innovation for our members, because what it would then allow them to do is that it would allow them to, in the meantime, get benefits, but also allow them sufficient money to be retained in their account so that should they retire, they would then be able to draw on their retirement fund to be able to cover their retirement benefits. So you are dealing with not only the old problem, but also dealing with the short term and the medium term. So that's our plan. This law that is currently in Parliament that we've been talking about has been there since August of last year. Once passed, we will be able to come up with a plan for our members to enable them to save for not only their retirement, but also to save for midterm access.
Thank you, Richard. So if I hear you right, you're telling us to pick up our phones and call our MPs and tell them we needed this yesterday for all of us who are clamoring for early access.
Absolutely. So for the 94 participants who are on this webinar, yes. I think now is your time to speak to a member of parliament to pass that bill, because if that bill had been passed, I mean, And it had been in the offering since 2011, as I said. If that bill had been passed, we would definitely have been able to resolve this problem of part access to your funds, because there would have been a product called unemployment benefit. In fact, I was looking at what the social security funds of the world have done, right? Most of them have done one of two things. Either they've allowed members to reduce their contribution rates. Okay, so instead of the 15%, they say maybe put in 5% to continue to get the same benefits that you're going to get. The second area would have been to allow the employer to withhold their benefits, which is what we've done ourselves. But the third one is to allow members to withdraw their unemployment benefit during this period in order to save them. Nobody has been able to withdraw their retirement benefit for purposes of COVID, because you don't save for 20 years in order to save for retirement and then draw it out for a 3 months or a 6 months problem. I think that's basically the principle of pensions, and there's nobody in the world who has been able to do that with their pension scheme. And I wouldn't therefore recommend it to us Ugandans, that we should, pay out our members who have been preparing for the last 30 years for their retirement, to pay it out because we have, a 6 month, hopefully not 6 month problem, but I hope shorter problem.
Perhaps still tagging onto that, on the issue of interventions. We know that the fund has passed the 13 trillion mark. It's growing quite fast. What within the confines of the law, what can the fund do to stimulate the economy as is now? What are the tools that you have that you can deploy and that you're thinking of deploying?
Okay, so obviously we are not government, but we can contribute to government's efforts. So government has two tools to stimulate the economy. They can use monetary policy or they can use fiscal policy. Now, I'm sure you've noticed that what Uganda has opted to use is the monetary policy. They have reduced interest rates. They've given banks the authority to discuss with their customers a way of overcoming the challenges of cash flow, so renegotiating their debts, renegotiating the payments periods, and all that stuff that comes with it. But they've also done what they call an expansionary policy, which is basically allowing more liquidity in the economy so that the economy does not run short of liquidity and basically continue to operate. That's what Uganda has done. On the fiscal side, there's been very little that has happened there because largely, and I would agree with government, is that they've got very, very limited space to operate within. For a long time, that they were struggling with their tax targets, and therefore it would be very difficult for them to be able to allow some tax incentives. So if you really think about it, what Uganda is doing is really allowing the monetary policy side to be able to increase liquidity within the economy so that people do not run out of money to either consume in the future or even to expand their businesses once the opportunity allows them. So our part as the NSSF is obviously to ensure that we continue to collect as much as we can and deploy this money within treasury bonds. Government uses treasury bonds to basically back up their fiscal side. So if they don't collect enough taxes, they end up going to the public to borrow, and they could borrow locally or they could borrow externally. Now, if you borrow externally, there is the issue of the exchange rate also coming into play. But if you borrow locally, the only variable you need to look at is the interest rate, the cost at which you are borrowing this money from the public. So our part as NSSF is to ensure that that bond market continues to be liquid. So we will continue to participate within there so that we can offer resources to government so that they can do things that they want to do now before they collect the taxes in the future.
And within the ambit of offering resources to government, we know that the government has two vehicles for investment. There is the Uganda Development Corporation, which is currently fully active, and the Uganda Development Bank, which can also provide concessional term loans to especially development sectors. Do we see, are we likely to see NSSF getting into these bodies to try and get money to, for example, the manufacturing sector? Because the paradox of it is that while the contributions are generated from Uganda, we are ending up borrowing some of this money, NSSF money, through Kenya Equity Bank to get it back into Uganda. And if we were able to access it locally through a structured process, definitely, it would certainly do a lot to help us as manufacturers, but also help the Ugandan economy.
This is one of the paradigms of paradigms of life, or the dichotomies of life. I think that's the word. But anyway, we invest in companies because they go onto the market and raise money, right? Unfortunately for our manufacturers, I'm sure you know, very few of them, if any, has been on the stock exchange to raise money, right? So many of our manufacturers are deciding to raise money using either private equity or family resources, and we find that is not a good way, an efficient way of raising capital. A lot of our manufacturers, unfortunately, continue to go to banks to raise money at 16, 18, 20, 25%, whereas they could have gone into the equity markets to draw out money. We are always looking for opportunities. You know that the last manufacturer of pharmaceuticals to raise money in this market was more than 3 years now. And we invested quite heavily in there. So we are always willing to invest in companies, but they've got to come to the market. We can't go to them. We can't do. We've even tried private equity. We've got a fund, the yield fund, which we invested over 2.5 million euros to try and see how we can revive the agriculture sector, especially on the value addition side. But our frustration is that Ugandan companies aren't looking for capital in the right way. They are looking for capital through debt, but there are many other ways of looking for capital. And we would like to urge, if any of them are listening in here, please raise money through equities, and then NSSF will invest in there. The only reason we invest in Equity Bank is because they are listed, but job blocks manufacturing down the road is not listed, and we can't invest in their companies. If you look at Uganda Development Bank and UDC, I think they're good initiatives, but even they will struggle because at the end of the day, they are providing loan capital rather than equity capital, right? Of course, UDC does provide equity capital, but their challenge is that they are not well capitalized. So we need to find a way of capitalizing these institutions so that they can bridge that gap of raising capital. But I would urge companies to really seriously look at setting up their companies so that they can raise their capital through the equity markets.
Okay, thank you, Richard. But now, to all the people on the webinar, we are now opening this up for questions. If you're familiar with Zoom, there is a hand up option. If you put your hand up, we'll pick on you and give you an opportunity to ask any questions that you may have. Do we have any online? Yeah. Okay. Now, perhaps as we wait to hear from whoever is online, just to also remind you, today is International Labor Day. So happy Labor Day to you all. I hope that you're ready. So we have Mr. Twaha Kawase online. Mr. Twaha, can you hear me?
Yes, I can hear you.
Yes, please proceed to ask your question.
Yes, thank you, Uma, and thank you, Richard, for the excellent exposure. Now, I had Richard talk about a yield fund available, but for agriculture. Richard, do you have any plans for a similar sort of fund, but geared towards SME sector? Not necessarily in agriculture, they could be services, they could be in industry, but SME, even trade, because really it's going to be a squeeze in terms of accessing money, and which is not very expensive. For example, private equity would be money which is not expensive at all. So that's my question. Do you have plans for availing funds, not necessarily for agriculture only, but for SMEs in services industry or even manufacturing? Thank you.
I think let's take 3 questions so that we can answer them immediately after that. Yes. Yes, Mr. Cuthbert Isingoma, we can see you. You can proceed to ask your question. Mr. Cuthbert Isingoma, can you hear me? I think you need to unmute on your side because you're on mute. Yes, now you seem to be on. Can you ask your question, please?
Yes, thank you so much. My question to Richard is about NSSF investing in areas that it did not get the money from. Because currently they're investing so much in real estate, and yet the money they have, they get it from employers and employees. I would think institutions like Uganda Manufacturers Association, instead of running to banks to get money, they would be coming to NSSF, because that's where NSSF gets money from. Now, if members of WUMA or manufacturers or other entrepreneurs can get this money in order to increase on their workforce, NSSF would be getting more money because they will have more employees contributing towards NSSF other than the employers, the manufacturers, going to banks to get money. So NSSF has been investing so much in real estate, and yet real estate does not get money early enough, faster enough. So I would think NSSF should invest money where it gets it from, other than investing it in other sectors where it does not get it from. Thank you so much.
Okay, thank you very much, Cuthbert. I know for certain that the portfolio of NSSF is quite diversified, and real estate is really a small element in there, but I know they'll respond to that. We have Albert Ovon online.
Hello, good morning, Richard. Thank you so much for that insight. I would like to touch on the amendments you spoke about, the early withdrawal. Ordinarily, social protectionism is very important for a sustainable development period. And at this moment, job insecurity is high on the agenda for most employees. Ordinarily, my question is, why can't NSSF stand out strongly and address the issue of discussing the bill that has been tabled before Parliament? I hear your voice of us picking a phone and calling our MPs, but on your side, wouldn't it be wise to present a paper at this critical point in time? Thank you.
Very much. We'll take those for now. The others, please keep your hands up and we'll get back to you. Richard, we had a question from Toha Kawase regarding a yield fund for manufacturing and other sectors. We also had a question from Cuthbert Isingoma, who was asking about the investments of NSSF and your targeting of the same. And then we've had Albert Ovon asking about early access and what NSSF is doing to push for the bill to be passed as fast as possible, given that it's the hindrance to early access. So over to you.
Okay, so thank you so much, Mr. Kawase. I hope you're doing well in this lockup period. When we launched the Yield Fund, we were quite excited that we were about to unlock the funding for agricultural SME. To our horror, I think we've been about 4 years now in this fund, and we have hardly made a scratch. I think we've done about 6 deals, and I'm not too sure. I should have updated my knowledge, but I think we've done about 6 deals, sizes of less than $1 million per deal, right? So we haven't done quite a lot. The truth of the matter is that 2.5% of our portfolio, which today is which is equivalent of about 300 billion shillings, is available for private equity investments, and SMEs are one of our target market. But the challenge we've had is that owners of businesses are not willing to let people invest in their businesses because they don't want to give up ownership. They do not want to introduce controls. They do not want to introduce good corporate governance. They do not want other board members to be on their companies. Unfortunately, it's one of those Ugandan things that once you've got your own business, you don't want anybody else. You will only want somebody else to come in there once the business is not doing well. And unfortunately, at that stage, nobody else wants to invest in your business. So my urge to Ugandans is that if you've got a business, once it's doing well, please look for equity. Make sure that some people bring in money, whether it's private equity or even public equity. That way, your business will improve. You will get a smaller share of your business, but you will continue to thrive. They will help you to improve the governance structures. They will help you bring in the capital. They'll help you to bring in the expertise. There are so many advantages of having a listed business because it's like the old adage of should I have a large pie of a small company, or should I have a small pie of a large company? I think the answer should be that you should aim to have a small pie of a very big company. That way you will thrive, right? If you look at all the startups in the world, right, your Googles of this world, they all started up as small private enterprises, but these people have allowed in public equity to come in and make them even much, much, much bigger. But the owners of these businesses are still involved, right? I think Ugandans just don't understand the fact that it's much, much better to get money from equity rather than to get money from banks, right? I don't have a problem about banks, but our banks are short term. They just give you money for 1, 2, 3 years, right? It's really working capital. But if you're looking for money that is going to what they call patient capital, you only can find that in equity, and equity means that there are some conditions you've got to forego. Which brings me to the question of Cuthbert, I think. First of all, I think it's not true that NSSF invests all its money in real estate. We only have invested about 6% of our portfolio in real estate. Our largest investment is into fixed income. That is government securities, almost 80%. And the rest is in companies, the ones that are listed on the stock exchange, but also some private companies. I don't know if the public knows, but we are a big shareholder in Serena Hotels in Uganda. We are big shareholders in Housing Finance Bank, which is not listed on the stock exchange. So we do provide private equity investments, and manufacturers on this webinar, please bring your companies. We would love to invest in them. And as I said, the last company we invested in was a manufacturer of drugs, which, as you all know, are listed on the stock exchange. There was the last question from Albert, I believe. How strongly can we be? We've been before Parliament 5 times. We've been all over Uganda telling people to talk to their members of Parliament. I've been to Parliament to talk about the advantages of this bill. We now have a crisis which we could have easily resolved with our members if we had passed this bill. We would have been able to allow our members to get partial benefits relating to unemployment if they had already subscribed to them. So the answer to the question is that we've done everything within our means to push Parliament to do this. But as I always say, I don't think Parliament find this bill attractive enough for them. I think maybe the workers of Uganda need to demonstrate once the situation is opened in front of Parliament to force them to pass this bill. I think the other bill that we need to force government to work on is the health insurance bill, because again, if you look at the funding to insurance, I mean the funding to health, if the health insurance bill was already in place, we would have been able to fund a lot of the money that is now currently being asked for from the private sector. We would have been able to use that money out of the fund to fund health insurance. So I think the members of Parliament need to be told how to fund these processes. They need really to look at what's important, create the avenues for members to begin putting money aside, so that in future, when such calamities like COVID turn up, we should be in the best place to do so.
Thank you very much, Richard. Now, I'm mindful of the fact that this webinar is meant to be 1 hour long. We are already 5 minutes over. So I'm going to request that I think we see one hand up. The two hands up. We'll request that you type out your questions, and we'll definitely share them with NSSF for an answer. But I also wanted to respond on the issue of support to manufacturing and the fact that the business practices are in question. Given where I sit, at least I know a lot of our members have very good business practices. The challenge still remains that I think our equity market is quite restrictive in terms of the kind of offerings available, and there's need for a discussion around this. And I think NSSF can play a very crucial role here. We need to have a secondary market as a country, so that in the event that you don't want to hand over total control, you can still have secondary shares listed. But beyond that, I also think NSSF has a role to play in working to develop the capacity of these entities, then be able to fulfill the requirements that are in place. And what we are doing as the UMA is we have in place a de-risking program, and we welcome anyone to join it, where we take a company and move it through the phases, so that at the end of it all, the structures and everything that is required is ready. And I'm glad to hear that, Richard, you're saying NSSF is interested in this kind of discussion, and we'll certainly take that offline. Perhaps now
we definitely want that discussion. I have been dying to have that discussion with the UMA. Please, if there are companies that would like to go to the market, would like to raise capital, either through private equity or through public equity, let's push them our side, all right? As I've said, a lot of the companies do not want to lose control, and that is a big problem, all right?
Yes, certainly. Could we have last words? Perhaps we start with Geoffrey, and then we go to Richard, and then we'll close this webinar. Geoffrey, any last words?
Thank you, Daniel. Before my last words, I've seen a number of questions on the chat, but specifically I've picked out the one that still goes back on the deferral. So quite a number of people asking whether if you laid off your employees and you re-engaged them afterwards, you'd still need to pay NSSF. Again, the simple answer is that NSSF is only paid for people that are currently employed when you've paid them a salary. So if a business takes the hard decision of laying off their employees, okay, and then is able to engage them after about 4 or 5 months, the contributions would resume at the point when these employees are back to the company, okay? The same goes for companies that have chosen to cut the salaries. So they're paying some people 80%, 40%. Again, we expect that the payment to NSSF would be a percentage of what you've actually paid. So it is not true that because you've laid off employees and that you plan to bring them back later, then we're also asking you to actually pay NSSF on it. The other key thing that we need the manufacturers and the rest of the customers to know is that even for the period for which we permit you to defer the contributions, it is extremely important that you continue to file your monthly schedules. Okay, so let's talk of April, May, and June, in which you are unable to pay now. Our expectation is that the schedule that details the workers for this period ought to be uploaded onto the employer portal, because we don't want to get to a point, say in September or August, when you're supposed to be paying, and you miss out certain people that would ordinarily your employees for the period when we gave you the deferral. So it is key that even when we permit you to defer, you file your contribution schedules on the portal to enable the fund know the specific individuals that you ought to have paid for. And my concluding remarks are that this deferral is meant for companies that are financially distressed. Okay, so let's not abuse it, because it's not complete waiver of your obligation. After a few months, you will still be expected to pay this money. And if you take even longer, there is a risk that you will pay interest that ordinarily the fund would be the one to pay. So my call to the manufacturers and the rest of the sectors is that let's only use this deferral if we are financially distressed and we are unable to easily fund the operations of the company. That way, you can opt to go for the deferral. But if you can afford to continue paying, even if it's part payment, it's much easier to pay a little bit of the money than waiting, say, for end of September. Okay, so if I'm supposed to be paying 40 million per month, even if I'm able to pay 10 million or 5 million or 20 million for now, I should contact the fund and say, out of my 40, can I pay part of the money now? That way, you limit your chances of getting out of COVID, of getting to September, and you've got an extremely heavy bill that will prove extremely difficult for the company to pay, in addition to the current payments. So I want to thank Uma for giving us this opportunity, and whenever there is need, you can always call upon the fund, and we're always glad to have a chat with our members. Thank you so much, and happy Labor Day.
Thank you, Geoffrey. Richard, your final words?
Well, thank you so much, first of all, for giving us the opportunity to interact with your members. We would really love to have a one-on-one with those members who are really looking for equity capital. We are interested in seeing whether we can participate as private equity, or if they're also willing for us to help them to take them to the market so that they can look for public capital. So definitely that is an offer that's on the table. With regard to their employees, we are hoping that they can continue to pay them a salary, of course. If they do not, then we will be basically waiting for them, and we'll give them that opportunity to basically defer their payments until the end of June, but they shouldn't hold out too long, because then the interest kicks in, which we could have paid to them. With regard to the law, I am hoping that if there's anybody who's got any influence, please let Parliament go back and do their work. Let them pass this law so that we can offer our members slightly more than we are providing. I always end up by saying that if you look at the numbers, NSSF contributes about 10% of Uganda's total savings to GDP ratio, okay? If NSSF was allowed to offer more products, to service more needs for our members, that percentage would go higher. And much of this money, as you know, is money that government uses to invest and also companies use to invest, because it's out of savings that investments are created. So if we have low savings, as we have as a country, we end up having to go abroad to borrow in order to invest in investment. So I would suggest that we need to raise our own local borrowing, our local savings culture, so that we can have more savings, so that we can invest internally and help our lives become better. Thank you so much for the opportunity to talk to your members.
Thank you very much. Thank you, Richard. Thank you, Geoffrey. Perhaps my last word is to all you who have been able to join us. So thank you very much for sparing the time. We know this is a public holiday. You're probably home trying to figure out how your businesses are going to survive going forward. But we are glad, I think, to hear that NSSF has provided an opportunity to defer our payments. I think a couple of standout points in there were that you need to reach out to your relationship manager at NSSF or write to NSSF and explain the particular circumstances that you are in, and if they will then have a discussion with you that is dependent on where your circumstances are at that moment. So please take advantage of that. As always, we say copy in UMA in your communication as a member. We then help to coordinate and ensure that the response is as efficient as possible, but also to ensure that we guide you on how and where to go. And then we shall definitely be taking you up, Richard, on the discussion on de-risking industry and de-risking investment in this country, because we look forward to a day when we sit down and say 50% or 80% of the amount collected by NSSF is invested locally. That would be a good day for Uganda and a good day for all of us. So from us here at UMA, we urge you to continue this discussion on our social media handles. That is on Twitter at NewsUMA, on Facebook at Uganda Manufacturers Association. The discussion can go on, and we shall keep picking the issues that you raise so that we can forward them for feedback from NSSF. Perhaps the other one is you can also carry on a discussion on hashtag UMA NSSF webinar, that is hashtag UMA NSSF webinar, so that we can quickly identify those issues. Otherwise, we wish you a very happy Labor Day. Reflect on what you're going to do for your employees as you go ahead. We would urge that if it's possible, please do not lay off your workers, but of course the circumstances are different where you are. Make the value judgment, but ensure that at the end of it all, we do what's best for the company, what's best for the country, and what's best for Uganda. Daniel Bironje signing out. Have a good afternoon.
Thanks so much, Daniel.
Thank you, Daniel.
End. I'm free to leave.